All right, welcome everyone. Thank you so much for joining us. Can everyone see my PowerPoint? This is financial management for projects. Awesome. So this is financial management for projects part 1. Part 2 is being held tomorrow morning, so hopefully you can join us for that. And this is part of the Southern Vermont Economy Project Development Series. And I'll talk about that just a few seconds. Just some Zoom etiquette. One, this is being recorded. So if you do have to hop off at some point, you can watch the rest of it a little bit later. If you have not already, if you could just rename yourself by adding your affiliation. So, you know, whatever organization you're representing or project that you're representing, that would be super helpful. And then if you could just keep yourself muted, that'll cut down on, you know, all the background noise. And while Gary is presenting, if you do have any questions, you can enter those into the chat function. I'll be monitoring that and interrupting Gary with those questions. So for those of you who have not heard of the Southern Vermont Economy Project, this is a project at the Brattleboro Development Credit Corporation. It's funded by the USDA, Rural Development, and it provides webinars, small conferences, mini summits, technical assistance, training to help advance our local economic and community development projects. And that's probably why all of you are here today. And this is the website if you have any, if you want to learn a little bit more. And like I mentioned, this is part of a project development series. So we just hosted our project stewardship workshop that was at the beginning of the month. We are doing the financial management now. And then we will have a 2-day project management training with UNH Extension in September. And then we'll also have a grant writing workshop sometime this winter. So keep an eye out for those. All right, I'm going to hand it over to Gary. Gary is our trainer for today, and he is with UVM Extension. So I'm going to stop sharing, and Gary, if you want to go ahead and share your screen.
Well, thank you very much, Sarah. This is just, I really appreciate being invited today to speak. Brattleboro Development Credit Corporation, and of course, as Sarah introduced, Southern Vermont Economy Project. So thank you so much. I just have a very quick introduction because I've got quite a few slides, and I know budgeting is so exciting that I have to move very quickly so that you all don't go comatose. But my name is Gary. I'm a community development specialist. I actually live in Georgia, Vermont, which is kind of, if you flip the state upside down, I'm where Brattleboro is in the northwest part of the state. And I'm former dean of Associate Dean of Finance and Operations for UVM Extension, had about $14, $15, $16 million budget, annual budget. I work on workforce development with a grant called Lake Champlain Sea Grant, which works with SUNY Plattsburgh as well as UVM. And I'm a trustee and treasurer for Georgia Public Library. Been doing that for a number of years. And I also have this little icon up in the top right there, which is this about my little background. So a returned Peace Corps volunteer from decades ago. So see if I can get this to move forward. There we go. I asked Sarah to send out a questionnaire about some things that you were really wanting to hope to take away from today's session. And here's some things that I learned from the spreadsheet that Sarah sent me. You know, how do we raise money? What does a budget of this for this kind of thing look like? What are nonprofit requirements for financial recording? You can read some of the others. Now, need to know more about capital expenditures. This is, of course, going to be I have to reduce. I'm sorry, I have a little technical issue because I'm hiding some of my PowerPoint slides there. There we go. Like to know more about financial systems. Bobby is going to be talking about capital expenditures from BDCC tomorrow. nonprofit budgeting. What am I doing right? What am I doing wrong? Probably you're doing lots of things right, and there's probably things you could do more right. And some capital assets and depreciation, and what does financial management actually entail? So I'm just starting with some learning objectives, and I'll try to keep an eye out for the chat box, Sarah, but if I'm not paying attention, just interrupt at any point. First, appreciate how your organization's values and vision and mission relate to your budget. Understanding what a budget is, of course, is a learning objective that's very important. How to be able to describe basic accounting terms. I think that's really important as you work with a bookkeeper or an accountant that you work with, is that you at least understand some of the basic terms so that you can kind of talk the talk a little bit better. And then be able to describe the budget cycle. So we'll talk a little bit about budget cycle, and then possess increased knowledge about managing the budget. There's the budget cycle, how to develop the budget, but budget management, of course, is something that is really important. And then understand a bit more about financial controls. If we don't have enough time, that's unfortunately something that we'll have to drop off the presentation. But financial controls are important for any organization. And I, of course, have a scary embezzlement story, which everybody enjoys, I hope. So this is the agenda. So we talk about connecting the mission, vision, and values, and then we're going to go over to talking a little like an accountant, maybe even perhaps more like a bookkeeper than an accountant. What a budget is, key points in preparing the budget, steps in the budgeting process, managing the budget, budget controls, and then your favorite number, number 8, which is this is done. So it's really important to me in all the budgets that I've developed. It's how you spend your money, you know, that reflects what you believe, what you you spend money on, what's important to you. So it's about your values, your mission and vision. And I always start with this with any organization. Values, of course, are what your organization believes, and mission is what your organization does. And I imagine I looked through briefly the list of organizations that are represented here, and you all have missions, and you have a vision of what you want to achieve. And that really, this is fundamental to your budget, because how you spend your money shows who you are and what you believe in. And you can think of in your personal life, if you give money to X organization versus Y organization, the money that you give, for instance, to organizations that you believe in illustrates your values, you know, your core mission as a household, as an individual. So I could talk a lot of, I think that's really important to remember, is just thinking about how the strategic plan, how your values, vision, and mission connect to budgeting, because that's what really a budget is. It describes what you believe, what your mission is, what your vision is. Accounting isn't, it doesn't have to be excessively complicated. It's just a way to gather information and analyze information and make decisions with information about money, value, worth. So that's basically what I'll be talking about. And so I'm going to just talk about, I probably am going to go over maybe 10 or 12 terms so that you know what we're headed to. So some of these things you may have heard of. I know that, again, in Sarah's listing of people that responded and are attending today, we have very high levels of knowledge about bookkeeping, about accounting, about budgeting, about financial management. And then there's some of you out there who have a position of authority, or as a chief executive officer or or a president or, you know, somebody running an organization that is found, oh, you're in the thick of things. You might be trained as a library director, or you might be trained as something else, and you need to know this too. So I'm going to try to strike a balance here. So hopefully I won't lose too many of you, and hopefully too many of you won't be bored. But like we say in a library, there should be something that disappoints everybody in a library. General ledger is a complete record of the library's financial transactions throughout. Oh, I have library in here. I meant organization's life. So that's when somebody talks about the general ledger, that means all the things that you see on the right-hand side, if you can see. I know there's one person who's connected by telephone, and hopefully you got the PDF of this. But the general ledger includes your expenses, your revenues, what you owe, what people owe you. Um, all those things are in the general ledger. And a chart of accounts, I don't know if you've ever heard that term, chart of accounts, but it's a created list of fields. Like you can imagine an Excel spreadsheet. A field is a column in an Excel spreadsheet. So it's a created list of fields used in an organization to define each class of item for which the money is spent or received. An example, of course, would be like supplies, or it would be I don't know why I'm blanking. There's so many different expenses that we have, but any expense, how you set it up, how you read it is a chart of account. So that's your list of revenues, how you get revenue and how you would get expenses. It's just a list of all those words. So we'll go through this very quickly. Revenue, of course, is any money that you've earned, and expenses are any costs that you incur. An invoice is different than a receipt. An invoice requests payment for a purchase. So you get a bill in the mail, the bill is an invoice. A receipt is after you get the invoice and you pay the bill, you get the receipt. So these are very common terms. I just wanted to start with some basics though, just in case. So those are some examples. Now, many types of accounting systems exist, and I know that there may, you know, I didn't check, but there's some libraries on the call today, and I didn't check to see if you were an incorporated library or a municipal library. But municipalities across the state of Vermont use NEMRIC fund accounting, so New England Municipal Resource Center. But there's a lot of different accounting systems. And I think on the top right, QuickBooks, people are mostly associated with QuickBooks if you're in a nonprofit situation or a business situation, or you have rental properties. QuickBooks is a very commonly used software, but there's also a lot of different other kinds of softwares. Now, the important thing about the difference between an accounting system and say, you know, a checkbook, what an accounting system is, it integrates all those different sorts of revenues and expenses, and it brings them from like the savings account and the checking account and some other account, oh, your credit card account, maybe a PayPal account, maybe an Etsy account, eBay, it brings it all together so that it integrates all the assets and all the liabilities, all your revenue. It brings it all together. Now, I mentioned NEMRIC, New England Municipal Resource Center, because if you are a municipal library or a municipality, I think virtually all the towns in the state of Vermont use NEMRIC fund accounting. And I know that they use NEMRIC for Grand List, for instance, management. But these are some of the types of accounting systems that exist. Now go back to talking the talk a little bit. Assets and liabilities. Assets are simply accounts that show everything that the organization or municipality owns, and liabilities are accounts showing everything the organization or municipality owes. So it doesn't matter if it's a nonprofit or if it's a municipality or if it's for-profit business, assets and liabilities are something that you'll hear about. A balance sheet, there's a couple different reports that you might hear about that are considered like foundational reports, and they're the balance sheet, there's an income statement, and there's a cash flow statement. Now I'm the treasurer of a municipal library in Vermont, and it's really simple. We don't have a balance sheet because we don't, the town owns the building. The town owns the assets, really. I mean, the books are worth something, and they do drive some of the metrics in the town budget, and the furniture, et cetera. But we really don't generally deal with a balance sheet. That's more at the town level. But a balance sheet is just a snapshot of your organization at a specific point in time. And it's usually the end of the fiscal year. And it shows the assets and the liabilities. It looks at equity. That's the owner's capital, retained earnings that you can see on the right-hand side. But basically, it's, you know, net worth is assets minus liabilities. So it just shows one of the metrics in showing the fiscal health of an organization. Now, I know I'm going very, very fast and I'm just skipping along over this, but the point of this talking like a bookkeeper is to get you a little bit, you know, aligned with, oh, okay, that's what a balance sheet. It really talks about net worth. It's assets and liabilities. So if you have any questions, please stop me just right in the chat, and Sarah will interrupt. And this is another example of you know, your company, your organization. I know I'm talking to a lot of different kinds of organizations. There's nonprofits here, I think. I don't know if there's any private. I think there are perhaps a couple private companies or LLCs maybe, or maybe sole proprietorships. And there might be a municipal organization or two. And then I wanted to briefly mention the income statement, which is also called a profit or loss, and it shows the organization's revenue and expenses during a particular period. So you would usually do it on a monthly basis, but you could also look at it a quarterly basis. And you could also look at it for year to year. You know, like if we're looking at revenue for this first quarter, how does it compare to last year's, how does it, you know, last year's first quarter? So again, this is an income statement, and it's net profit, and this is before the owner's salary and taxes, equals total revenue less the cost of goods sold less total expenses. Now this is a little more complicated than it needs to be. So often you just see like net profit is total revenue minus total expenses. Cost of goods sold is if perhaps you're making something. So say you're making tables. Cost of goods sold is the materials and labor that's required to make those tables. So it's the wood, it's the labor, it's the screws, and then the other expenses like accounting and legal fees, advertising, utilities, insurance are tacked onto that. So that's where gross profit minus total expenses equals the net profit.
Gary,
So again, yes.
we have a question.
Oh, okay, thank you.
Is it not possible to have the owner paid as part of expenses?
Oh, usually it's below. I've got to tell you, I've got a very, very tiny, small sole proprietorship myself, but it's not even worth mentioning. So I've never worked in for-profit accounting, but as I understand it, the payment to the salary comes after. So that's how I think that I would have to write Sarah, could you write this down and send it, and I can respond
Yep,
later just to
totally.
make sure. In fact, there's probably somebody on this video with a high level in for-profit experience that can say that, or can tell me about this. But in this, you can see in expenses, there's employer taxes, there's employee costs, but not return to owner. So going back to talking the talk, here's a few more terms that you may have heard of. A purchase order. We have to do, purchase order is a common, is part of the process at the University of Vermont, which is a $600 million nonprofit, as well as our tiny library in Georgia, which has a budget of $140,000 a year. It is from the purchaser to the vendor that authorizes a purchase. So a purchase order is something that is part of the control structure in accounting. What it does is it kind of requires somebody who wants to buy something has to go through somebody, usually a business support person or a bookkeeper within the organization, that gives approval to it. So they say, of course, one of the really basic things, of course, is that every expense that you make for the organization has to have a documented business purpose. So a purchase order is one step that some organizations have taken, or many, that is a control structure. It has to go through somebody so that they approve that it is actually, or agree that's a business expense. And it's a way to control a budget as well. So if you're going to use a purchase order process, really you have to get a estimate, or you have to find the cost of an item. Then you have to submit to the person who's doing the purchase order that you want to buy it, and they send a purchase order to the vendor, and then you can purchase the product. At UVM Extension, the most common use that I ran into for purchase orders was simply, with all the meetings that we had, we needed to rent space at a hotel, or rent space at a center in a town somewhere, and something like that would always be a purchase order. Or also, if it was over $1,500, it had to be a purchase order. So that's sometimes often how purchase orders work. Accounts payable is money you owe. It's just like you get the bill from Xfinity or the utility, whatever utility you might have. Once you get a bill, it becomes an accounts payable. And then accounts receivable is money owed to you. If you're in a for-profit situation, accounts receivable, accounts payable is very important, especially the age of accounts receivable. So you want to make sure that that you're paid in a timely manner. So a lot of software like QuickBooks, other software, will tell you the age of the bills that you send out, and it'll flag it, like, oh, after 30 days, you've got X, Y, and Z that hasn't paid yet. So it keeps track of those things. So this is obviously very important in cash flow too, is that if you have a lot of accounts receivable that are aging, getting older, you're not getting the money that you should be getting. Accounts payable, if you owe more and more and that's aging, that sort of shows a sign of maybe perhaps cash flow problems too. But you might run into these terms as well. Now this is going a little bit into the municipality side of things. So I'm sorry that this might be only really relevant to a few, but in Georgia, we have a municipal impact fee, and it's imposed on a residential development to pay for cost of public service, because with every new residence built, it adds pressure to the town to supply services. And a reserve, you know what a reserve is? It's a set aside of discretionary money for future use. Now, in the town of Georgia, the municipal impact fee and the reserve, we combine that to create our capital budget. And I'll talk a little bit, I think I have 2 or 3 slides on capital budgeting, capital assets, and you go into much more depth tomorrow on it. A grant is you don't have to pay it back, but it's something very specific. There's a specific uh, um, work that you have to do for the grant to receive the grant. And also grants always, well, not always, usually, well, pretty much always require reporting, financial reporting on how you spent the grant. And it has to follow your budget pretty closely. If you want, usually if you want to spend a grant budget 5% outside of what you've said you wanted to spend it for, you have to get approval from the grantor. For instance, if you say you're going to spend $10,000 on on salary and benefits, and you want to change that to, let's see, 5% change it 5%. You have to get the get the get the um, get the approval from the granting agency. Also, it usually requires a written report too. A few more things that you would be familiar with are endowment and gifts. An endowment is a donation of money that usually what you do is you put money in an investment or investments, and you protect the principal and you grow the principal over time, and you use only the investment income. So a lot of organizations, endowments are very, very important for foundations and for funding a lot of different things. So an endowment will grow over time. A gift is usually considered a donation of money. It could be an item, but it's for short-term use. You get the gift, you spend the money. In an endowment, the gift is given to you and you grow it over time. There's a library in this area that was given, I don't know, it was like $4,000 in the early 1900s by a nurse, and she saved the money over time. And with proper management of the endowment, it's over $500,000 now. So that's the purpose of an endowment. It really is set to give you the same spending power 50 years from now as it gives you now. Are there any questions, Sarah?
Nope.
Okay. Thank you. Okay, so switching topics a little bit, there were several questions about capital items, and Bobby Kilburn from BDCC is going to be talking about this tomorrow, and she knows a great deal more than I do about capital items. My experience in capital budgets and is really simply with the town. But a capital item in most organizations is something that lasts more than 1 year usually, and it's not like consumed. Like paper is a supply, a computer, I've got a little picture of a computer here, could be a capital item. There are also plenty of organizations that treat a computer as just an expense, but as long as it's, it lasts more than 1 year, then a computer would be a capital item. They're often funded from current expenses, like I said, but usually they purchase from special funds like reserves. And that's where you get into capital budgeting. Capital budgeting is usually purchased from a different fund that you set up, save over time, or through, of course, borrowing. Capital items may become fixed costs as they're depreciated over a set period of time. And just in this, to go from that thought, depreciation is just a method in accounting where the cost of the asset is divided, and there's different ways to divide that cost over its useful life. And just with apologies to Bobby, this is just the IRS depreciation schedule. Like computers are 5-year property. Even though at UVM Extension, we have a 4-year replacement policy, or we used to before COVID-19 has done who knows what to the university's budget. But automobiles are example, 7-year property, office furniture is found in there. And then you go into long-term properties such as commercial real estate. So I just wanted to note that capital expenditures, capital budgeting is a whole different topic. So, so I'm just going to leave it at that. Just wanted to pause here for a second. Does anybody have any questions about maybe some terms that I may not have mentioned? Because there are other terms that you might have heard your bookkeeper say or your accountant say, and if I know, I will try to answer that. If I don't
Carrie,
know, somebody will answer it tomorrow.
Bobby had just posted in the chat while you were going over grants. And she just mentioned that grant reporting differs between private foundation grants, state grants, and federal grants. And the grant agreement will usually detail those requirements.
Yep. Thank you very much, Bobby. Yes, I've been what they call as a principal investigator for a state grant for, I don't know, 10 or 12 years. I'm no longer have that grant, but every grant it will differ in many ways. And as Bobby said, UVM Extension, we get a lot of grants from USDA. So they're even within USDA, they can differ based on the department or unit within USDA. So thank you. Thanks, Bobby. Okay. Okay, so we'll get into budget and a budget calendar and budget management. This is like, you know, the meat of it. And what is a budget? It's really just, as I said before, it's an organizational plan that's stated in monetary terms. It really describes your values, it describes your mission and your vision, and you know what you want to spend money on, what you're working towards. In monetary terms, of course, it's an estimate of income and then expenditure over a set period of time. It's usually for your fiscal year. Now, I've been through a lot of budget cycles, and I want you to know that budgeting is really it's an art, and it's usually, if you get it. Last year, I have to tell this story. The Georgia Public Library came within $5, I think it was, of the budget, which was absurd. It just, we were right there. And that really never usually happens because of so many things that go on and the precision that's required. And of course, the bigger your budget becomes, the more difficult it is to really hit it right on the mark. So budgeting it's kind of an art. It's not an exact science. And so it's not like this hard and fast thing often, but we'll get into a little bit more about that. And then of course, revenues, money that come in, expenditures are money that come out. And this is just an example of, this is actually not an East Overshoe. This is in a public library in a town in Vermont, where you can see these are sources of revenue. So this would be seen on the revenue side, sales and fees. Maybe they're selling t-shirts, maybe they're charging for photocopying. Maybe they're collecting fees for overdue books, although we don't generally, no one does that anymore. An endowment, you can see here, this endowment indicates that it's a pretty healthy endowment. Because generally, rule of thumb, you're only supposed to use about 3 to 5% of an endowment's average over the last 3 or 4 years value. So this is a pretty good endowment at $26,000 for 1 year. And then expenditures, and this is probably typical for many organizations, is salaries are a good part of it. In this case, it's a little over half of our salaries. UVM extension, because we have real estate, we're about 85% salaries and benefits. And universities can be quite high, of course, other organizations, and other operating expenditures, and then collection expenditures. Just a couple examples, and now I'll talk a little bit about the budgeting process. So when you're approaching budgeting, again, think about your strategic plan. That's really important. Also, what are the revenue sources? How is the organization funded? Do you have an endowment? Do you have gifts? Do you have sales and fees? Do you have taxes from municipalities? Also, think about who the budget team is, what the roles are. If you have a board, then it's usually perhaps a subcommittee of a board, but it's really important to identify who the team is that's doing the budgeting and what their roles are. Gathering information, putting it together, running it by other people, things that you would normally think of when you're thinking of working as a team. How are expenses determined? That's very important, of course. And who has the final say? That's very significant. In the state of Vermont, public libraries, incorporated as well as municipal, have board of trustees, and they're sort of like almost equivalent to select boards. So the trustees have the final say, but we sort of describe the relationship like teenage kids to parents, that we're almost there, but we really have to make sure the parent is agreeable to that. So who has the final say is very important. It's usually the board in a nonprofit corporation, of course, and depending on the structure of a private company, if it's a sole proprietorship or LLC, they vary. Usually one person makes that decision. That's important to know, though, in the budget team, and how that final say is made. So then a budget calendar. We just had a meeting of our trustees this Monday, and we are actually starting our budgeting for FY21, which is January through December of next year. So we need to start early, and I'm going to get into some reasons soon here. This is just an example of a budget calendar, and I hope that you can read it okay on your screen. Needs identification really is a year-round sort of thing, right? You're out in your community, you're out with your customers, you're asking questions, you've got the pulse of your community. So that need identification is sort of always with you. And then later in the fiscal year, so that's what these numbers, this budget month numbers, I know fiscal years vary. Even in municipalities, they vary. Libraries vary all over the place. It's really amazing. If you get a grant, a USDA grant could be federal year for October through September. It could be the state year grant, July through June. It could be calendar year. So just think of this one as the first month of your budget year. Later in the mid-year, you're starting to think about revenue expenses for the next coming year. That's what I just said. It's early June, or I guess it's late June now, and we're putting together the thoughts and the structure for our budget for January through December of next year already. We've just started. Later in the year, you prioritize expenses, draft initial budget, and then develop budget and present. The present, of course, and the development of the budget is who's in your team, who's responsible for developing the budget, who is going to approve the budget. So sometimes presentation of the budget isn't really there because you're maybe a small team and you can develop the budget and approve the budget in one fell swoop. But in a municipality, we have to work very closely with select board to make sure that they know what we're thinking about. And we also have to know what they're thinking about as well, because we're a department within the town and we want to make sure that, for instance, whatever raises the town highway department is or the town offices are getting kind of merged. There's a lot of relationship here. And then manage the budget, of course, the whole fiscal year, and then relationship management. And that last bar is so important in budgeting. Budgeting really is about the math, of course, but more than anything, it's about managing relationships. And in the last 2 years, for instance, the CPI hasn't gone up very much. I should have checked, but 2 or 3% maybe. And our library has received a 30% increase in funding. And it's because of this relationship management. We've worked very hard to communicate well and to communicate what our priorities are, how much they cost, and then into the future, how they would provide for the community, how we could work together with the town officers. So relationship management is vitally important. I have this little block on the end here because this is sort of odd for us, is that town meeting, of course, is held in March, and our budget starts in January. So even though we have a budget that is approved by the select board, we don't actually have a budget until 3 months into our fiscal year, which kind of makes us nervous a lot of times, but it's integrated into the town. And if the select board supports us, we've had no problems at town meeting. In fact, one of the stories is that 20 years ago, the library couldn't get more money from the select board for a roof, which was needed, and somebody stood up at town meeting and had $5,000 added for the roof. Are there questions about this budget calendar? Because I'm just really is this it for here? And I think I can move my cursor up here and see. Okay, nothing in chat.
Nothing in chat.
Thank you, Sarah. Okay, so that was the budget calendar. Everybody should have a budget calendar. We are starting for FY21 now, and it's the calendar year FY21. It is a very strange year, as you all know. We have to talk to the town about what their expectations are. For instance, our taxes are due October 15th. So this again is part of the relationship. And then some organizations have taken really unprecedented steps this year. The University of Vermont and the state of Vermont, right, have delayed making any decisions about their budget year until they're 1 quarter through their budget year. So for UVM, the budget year starts July 1st, and really they're working with the same budget numbers as FY20, but and then September they're going to make some adjustments. So steps in the budgeting process: identify needs, identify revenues and expenses, prioritize the expenses, and then drafting the initial budget, develop the budget and present, and then the managed budget, which is, of course, that's a lot of work right there. But that's the 6 steps that I've put together for the budgeting process. And then we'll go over each one. Excuse me. Again, this is repetition, but repetition isn't all that bad. So identify needs. You know what you by listening to customers, right? By talking to townspeople, by uh, doing formal surveys or informal surveys, you know what you know what the customer needs. And you also have a strategic or business plan that is formally set down your path and strategic, 3 to 5 years out. You might have a tactical plan too, maybe 1 or 2 or 3 years out. And then a vision statement of what you want to become. Um, so those are important. Okay, so identify revenues and expenses. So you have to identify what the sources of revenue are, and you have to figure out where your expenses are. Now where is this information? And you can put something in the chat box if you want to add anything to consider. But for many of us, the current and past year's goals, so the revenue that you received and the revenue and the expenses you've paid for are a guide to what our budget will be next year. And in fact, it's hard to break out of that because, like, working with the town, um, they really, it's kind of almost an incremental budget. They think, okay, you're going to increase the budget 2%, or you're going to increase the budget 1%. So we worked very hard to get 11 and 12, 15% budget increases the last couple years. But generally speaking, if you look in the past, you can see what your revenues have been. You can think about how that might vary and the expenses that you've incurred. The other places, of course, where you can get information is in your strategic planning, your tactical planning. If you wanted to buy new software to do inventory better, to do something different, you wanted to put more money into marketing. So that's something, that you have to think about as a new priority or project. You research it, you find out how much it might cost. Um, and again, so I could use my university experience or my library experience. And in the library, we did a new um, a new software program project 2 years ago, and that's part of the reason why we got our increase. Is we demonstrated to our funders, the town, the select board, how important it was, what it would do for customers, and how it would make things more efficient. So researching what your new priority or project is, finding out how much it might cost, is an important thing that's one of the sources of information. I did note the consumer price index, and I was involved in real estate management for UVM Extension. We had 11 offices across the state, and in every lease, the consumer price index was really important in helping us come to terms with the owners, with the landlord, in figuring out what our next year and the next year after that, sometimes up to 5-year leases on what we'd be paying. So consumer price index is important too. That's one thing that you can use. There's a lot of databases. You can see the latest number here is a -1%. I think that was driven by energy costs. Another important thing to know, of course, is payroll tax changes. We were off a couple years ago because we didn't realize that one of the Medicare rates was going to be changing. I think it was mid-year, and so that put us a little behind. So if there's others, you can put them in the chat box. There's somebody added chat. Yep, right. That's a very good point for nonprofits. And actually, you can see that we do this in libraries too. Thank you, Bobby. Is that we know, for instance, how much per capita tax we get for the library. And the Vermont Department of Libraries every year collects information from every library, or almost every library. It's mandatory. And that acts as a guide in helping us describe to the select board, you know, what other collections look like, what average tax, revenues are for the library, and that sort of thing. So benchmarking is very important. Thank you for adding that. Any other ideas? Unfortunately, I think that a lot of us, even at UVM, University of Vermont, with as big a budget as we had, we were a bit locked into current and past years. Another thing that you can do, and I'm just going to add it right here because I could add it anywhere, is that UVM budgets 3 years in the future. This is a really tricky thing to try to, like try to convince your board to even do the fiscal year budget for next year. Then but if you can push people to think 2 or 3 years out, it can be really, I think, very helpful, because it gives people a better, clearer idea of perhaps of where you're going and what you want to spend money on, and it connects to your strategic plan better. It's very difficult, and it sometimes becomes maybe meaningless, like with this pandemic happens. But it's something to consider. We haven't done it for the Georgia Public Library yet, but I'd like to do that this year, to look at the next 2 years. But at the same time, we really don't know what's going to happen. And I guess we're going to learn in October when taxes are due. Our delinquency rate in Georgia is pretty low. It's about 2.2%. And hopefully it's not going to skyrocket. Right, prioritizing expenses. And that's the whole idea behind financial budget management, of course, is you never have as much money as you'd like. So you have to decide what's the most important thing to spend it on. This year, as you can imagine, a lot of people are not, for instance, libraries aren't buying a lot of books. We've invested a lot of more money into information technology, into ebooks, into things that people can access online. We've upgraded technology. So sometimes you have to kind of play it by ear and do what's right at the moment. So going on to prioritizing expenses, if there are additional programs that need to be included, you have to, that aren't in last year's budget, like the example I used for perhaps a software purchase, that's a one-time thing. Or identifying activities that you could eliminate or modify in the new budget. You've done something maybe for the last several years and you want to do something different. And then for existing and new programs, like I just said. So going into the drafting initial budget and develop budget and present, this is where it's an iterative process. So I will be, for instance, developing a budget over the next month. And right now I'm going to take this current year's budget, and I'm going to really have to talk to the town treasurer and the town manager very carefully about what do they see. I have a feeling that really no one knows right now what to expect. So what we'll probably do is draft an initial budget based on this year's. It would probably just be level funded. And I'm working with the whole board. So we don't have a subcommittee on financials. I really work with the library director and the chair of the board of trustees mostly, but we'll develop that initial budget. We'll meet with the select board chair and with the town manager and the town treasurer. So you can sort of take that and put it into your own life, into your own fiscal year, um, and think about when you have to start this thing. So, you can really be starting this, especially you should be thinking about things now. Now, I don't know when your fiscal year is, so um, if it is a calendar year, then certainly now is the time to start. And then these relationships are really, really important. I can't stress relationships enough when you're doing budgeting. And then value, you have to provide value. Now, for-profit companies provide value. They know they're providing value this because of profitability, because of demand. And nonprofit corporations, same thing. You have to provide value. Everybody has to provide value. For our particular situation, we have to provide value to the community. We have to provide programs that are engaging and informative. Uh, we have to provide things to help out the town. Does the town need a venue to to place information, to hold meetings, to get the word out about something that related to recreation or related to the town highway department? So just in that budgeting process, just relationships matter so much, and providing value means everything. And I know that I'm just saying things that you probably already know that are probably very obvious, but it's odd to me sometimes how people, when they're involved in developing a budget, sometimes forget that budgets really, really tell people what your mission is, what you believe in, and managing all those relationships of people who can help you advocate for the budget. Very, very important. And people that you have to convince too. And you're always going to run into folks that do not want to fund your budget at the level that you'd like it to be. And it's almost always kind of a negotiated settlement where you try to get to a yes, where everybody leaves something on the table and everybody takes something home with them, and is fairly satisfied. So I wanted to pause just a little bit before I got into managing the budget. So that's managing the budget will be maybe 15 or 20 minutes. I would be interested in what kind of fiscal years are out there. If you could put that in your chat. I should have asked you before this, of course.
Great question. I know at BDCC we're July to June.
Yep. And Bobby added, of course, about trade association for-profits, trade associations, actual estimates of services and goods. That's about, forming your budget. So there's an October 1st, so that's kind of federal based. July 1st is kind of what the state does. August 1st to July 31st. That's a good one. I'm on a grant right now that the fiscal year is February 1st to January 30th. It can be anywhere. June 1st. That's a interesting one. I like the mid-year fiscal years because the end of the December as an end of a fiscal year really cramps my holiday style. United Way, Westminster Institute, December 30th, yep, January 1st, McCullough Free Library, I assume, perhaps, maybe, I think, is an incorporated library, Jenny.
Give me a thumbs up.
Oh, okay. And for those out there who don't know that, the public libraries in Vermont, which are a very important institution, there's about 180 or more public libraries in Vermont. About 35% are incorporated libraries, and then 60% are municipal. And municipal were established by an act or a vote of the town, and incorporated libraries have been established by gift. So somebody gave money for a building, gave a building. They were established by gift and are a non-profit corporation, whereas municipal libraries are a department within the town usually, but they vary. It's crazy how much they vary. Butterfield, I'll have to look into that.
Mhm.
Okay, so I'll go forward here. Managing the budget. So I have some things that are just kind of like important things for me. Is first, when you're managing the budget, you really need reports on a regular basis and reports that you can read and understand. So regular basis, I usually mean monthly. If you have a larger budget, you can get them really, or you can get reports anytime you'd like to, but on a regular basis. So don't go for an extended time without looking at your budget. And reports, I mean actuals. That is what you've, here's your budget, and then what you've actually received in revenue and what you've actually spent in expenses. So it's a budget to actuals report. It shows you how much you made and how much you spent. And then you can get reports that you can read. Often you just get a summary report, high level sort of thing. And then if you have a question about it, like if you see a line like utilities and it's just like, that seems really high, then you could also ask for a detailed report. So in kind of language that I'm accustomed to, a summary report would be like a budget status report, and a detailed report would be a budget detail report, which is self-explanatory. Let's see if I can move this forward here. Okay. Oh, so I guess I should have gone to this slide as I was talking. So budget actuals compares what you spend. Transaction detail report is everything listed, every little item. So if you have a question of what you see on a budget status report, which is this like, just top level, you can drill down into it. Now, I'm going to show an example from NEMREC software, which is the New England Municipal Resource Center software. But if you're familiar with QuickBooks, the other accounting software does this really nicely for you in English that everybody can understand. I use QuickBooks, and the reports are really beautiful. You can ask it for anything you want. So again, let's go back to the important thing is that you get them regularly and that you understand them. Now, this is what we get from NEMREC. I won't go into why the revenue, the budget is in parentheses, which means it's a negative number. I won't go into there, but that's just the way the fund accounting software presents it. So this is an example we see. And okay, we've got this. This is payroll, $100,000, $86,000 that we've spent. See, this is what we get from the town. And I don't have access to the accounting software because for control reasons, they, of course, they wouldn't want to give it to me. But an important thing, of course, to understand it more is all the details that you have to add to it. Oh, okay, it's October. So that makes sense. We've spent $86,000 of it in October, 10 months through, about 10 months through, 21st of October, or is it the 19th of October? I don't know which one. We got doing pretty well, but like that's almost good enough. But here's another. Okay, add the budget balance. This sees it more clearly. Now again, if you have a commercial software like Quicken, or if you have a bookkeeper, they will be able to produce these reports for you, and they're going to come out looking much better than this. We're just at a bit of a disadvantage in using fund software for municipalities that is really built for more accounting type people rather than a trustee on a board who could have no idea has never seen a budget in their life. So budget balance, that adds more information. And see, this is just what I do for the trustees. Oh, here's even better. Like it's the percent of budget left. So that is a little bit more meaningful. And I like color code it for people to see. You know, you can say sick pay is like, oh my goodness, we're kind of low on sick pay there. What's happening there? You know, look at the detail more carefully. Uh, and that, but how are we doing compared to like the year? So what I also do is add, okay, this was produced on day 294 out of 365. 19% of the year is left. We've got 14% of the budget left. My job as treasurer is to tell the director, well, the 14% is okay because we actually just hit payroll, and there's 26 payrolls this year because it's every other week we pay library staff. So we're doing okay because this 14% really is just after the last payroll, and it's another 2 weeks until payroll. So what I'm trying to illustrate here is just there's ways to understand budgets better. And so if you have, and also if you have questions about it, you know, if you want clarity, talk to your bookkeeper, talk to your you know, treasurer. I wonder if you could put in the chat how many folks like feel like they're on their own, just like don't have. I wanted to go backwards here. Whoops, there we go. You know, if I know that, I guess another way to ask it is like, do most organizations have bookkeepers? Do you hire bookkeepers? Because even for instance, the smallest libraries, it's interesting. The libraries I've worked with, some have just had a actual written ledger or Excel spreadsheet that they've kept track of this stuff with. To the other side, you know, the larger libraries, of course, have professional staff to do the work. But a lot of the smaller libraries hire bookkeepers, and they hire third-party companies to do their payroll. Part-time bookkeeper from Jim, thank you. Board treasurer has an accounting career. That's very good. That's very, very helpful. Volunteer board, yep. So, okay. Part-time bookkeeper, treasurer, part-time fiscal manager, part-time bookkeeper. It's kind of a pattern here, isn't it? Volunteer board. So what I would suggest going back to this is that you need to get reports that you can understand. And a bookkeeper, a treasurer, they'll just be very happy to explain it to you if you have any questions, or to go into detail. You know, like the salaries is 65,000. I mean, the actuals is 54,000 has been spent, right? 54.8. You can get a report on exactly, you know, what people that money went to. So ask for that information. Got one more chat in there that I didn't see. Bookkeeper and finance committee. Yeah. So when you do have, you do the bookkeeping yourself. There's from Kathy Wilkin. So yeah, you want better reports, you better talk to somebody. Again, if you're using software like QuickBooks, it really does make it just a lot easier. Okay, we talked about regular reports. Here's some other things that I think are really important, and they're just basic things, but you'd be surprised at how difficult sometimes these simple things are. Keep up on purchase orders and invoices. That's, you don't want, if you don't like doing this, what you don't want to do is procrastinate, because it just makes things worse for you. This was a big challenge this past year, well, this March, as we went from as we went to totally virtual. So we had to build a process that was all virtual. And that was a challenge. And I don't know how many of you had to go through that. But there was a point where we were in between, invoices kind of piled up, and that was just like, that was a little bit extra, another hour or two of extra work. And if you keep up on stuff, there's much less likely to make mistakes. Because in the March thing, we missed somehow, somewhere, an invoice from a company was lost. So of course you get the letter, and you don't want to get that letter. You want to pay on time. You want to be a good customer. So keep up. Reconcile monthly. So this is like you would perhaps with your checkbook, or maybe you look at your personal credit card statement and you say, oh yes, that, make sure everything lines up. Um, in our town, we have such a process. We have purchase orders, we have invoices, we even have warrants. I don't know if anyone has ever heard of warrants, but a warrant is just another layer after a purchase order. After the purchase order has been written, there's a warrant that's attached to that, which I have to sign, which gives like additional second tertiary authority to spend the money. So reconcile monthly, that's, looking at your invoices, looking at your bills, making sure that you've paid everything, making sure that there's no weirdness that happens. Making sure that everything is a business expense too. That's really, really important when you get into, doing business ethically, of course, and when you get into an audit. Don't let questions linger, excuse me. If you just don't want to go for months and months and months or years not knowing what exactly this bookkeeper has said, or this seems off, just ask the question. Bookkeepers, treasurers, financial people, accountants, they'd be happy to answer any question that you have. You just have to keep on top of it, ask questions. And if you want something changed, ask. This is one of the lines that sort of reminds me to say that when you, in a budget, oftentimes a budget is a guide. So, and this year is a very good example. We are, even though we have a line item for books and a line item for ebooks, and they've got a budget, we're shifting. We're not going to spend as much money on books as ebooks. We're going over budget on ebooks, and that's okay. Don't think of those lines as like you have to stay in those lanes. You can't get out of the lanes. In the town, of course, you can't change the budget. You cannot modify the budget because it's a vote, and it's a vote at town meeting. That's the budget. You're not going to change that budget. But as long as we hit the bottom line, say our operating expenses might differ in category than what we thought we were going to spend. But if you hit the bottom line properly, you're good. So when I say if you want something changed, what I really mean is about expenses. Because a really important thing to do is to make sure that our expenses are coded correctly, because you want to know exactly what you spent it on. And I've seen in the past, and this has even happened in university life, that, oh, we're running out of money in this budget line in supplies. But so I've got money in this line, so I'll just expense it to that line. You want to put them in the correct category, and any expense, because that's your record. That's how you judge, your fiscal year, how you can plan for future years. And if you see something wrong, make sure that you ask that it be changed. So that goes back to the questions, like everybody who's managed a budget or has read budget reports has seen a line saying, what is wrong with that one? So the sooner that you ask questions about that, the better. because the bookkeeper will want it to be correct. You'll want it to be correct. Ask for it to be changed. The other thing is understand what you're responsible for. In the hierarchy of things, for instance, our director has certain authority about spending money without going to the board to do so. There are guidelines that we have for her, but as a director, she's got responsibility to spend those funds. She knows what the budget is, but to spend them for what they are, as how she sees fit. So it's important that you know what you're responsible for, what you can do. Was there a question perhaps in the chat? Let's see.
Yes, there is.
Jenny.
Do you budget volunteer hours for programs, or is budget always about dollars only?
Whoops, I went backward. Okay, that's a good question. We don't budget volunteer hours. Volunteer hours obviously have value. And we can report this to the town in hours of volunteers off, do work for us. We consider volunteers as pretty much unpaid staff. They have to follow the same procedures and policies as staff do. That's very important. We treat them the same. Of course, obviously they're different. They're volunteers, but they're volunteer. They're giving their time, but their time has value. So you can report to the town the value of that time, but it's never in a budget. Does anybody else have a different experience? There you go. Thank you, Bobby. As a nonprofit, when filling your 990, report volunteer hours. Okay. Thank you. Yes, and that must be why UVM Extension keeps track of hours. And we've got a lot of hours of volunteer because the University of Vermont is a not-for-profit corporation. Okay. Thank you, Bobby. Hey, it's pretty handy to have you. Don't expect the same for capital budgeting tomorrow.
Jim
Yes.
from Westminster Institute
Yes.
says you might be able to count volunteer hours as match for some grants.
Absolutely.
So some grants do look for in-kind.
Yep. And we just in my other job with Lake Champlain Sea Grant, where I do workforce development, we just got some COVID-19 money from federal NOAA, from National NOAA, and we matched it, $50,000. Part of that, a lot of it, is volunteer hours for its time. Yep. Thank you, Jim. Thanks, Cynthia. Excellent points. And then the final bullet I have there is communicate. And that's what this is always about. It's about relationships. It's about communicating. That's really the reports that you get for your budget are really kind of pretty straightforward. You've got revenue lines, a couple revenue lines, a few revenue lines maybe. And then the expenses, just keep tabs on them. And it's about relationships. It's about communicating. It's about getting the value from your bookkeeper that you need, and it's about appreciation too. A lot of you folks are working with volunteer treasurers and volunteer people that do the books for you, and so that's really important too. I already mentioned about coding correctly. And budgeting time should be budgeted. So that's, not falling behind. Put it on your calendar to pay attention to what needs to be done. Plan for the unplanned. This is really, it's tough. The part of the budget that you don't want to maintain flexibility about is really payroll, because the people that you hire rely on you. If you've hired them for 20 hours a week or 25 hours a week or 40 hours a week, you don't want to mess with that if you can at all help it. So, we keep really close tabs on our payroll, and the director does a fantastic job. But in operating, we've had to be flexible this year, probably just like you've had to be very flexible this year. You know, who knew we were going to spend so much money on isopropyl alcohol and wipes? Anything else anybody wants to add? Give you a few seconds, see how the chat responds. I am way far north, so. And also I wanted to add, is this wonderful to present to you. I lived in Brattleboro a few years, and Chesterfield as well. It's a beautiful area, and that was many, many moons ago. But I have an appreciation for how beautiful it is and the folks down there. Maybe the vibe of Brattleboro has developed a little differently since I moved out, but great place. Okay, seeing no chat. What did I want? Although this is a quick aside, and this was just I've probably answered these questions perhaps for you, but the requirements for financial recording, really, you just have to keep a general ledger, and you know, a commercial software bookkeeper, good investments. Every expense, as I've said before, needs to have a documented business purpose. In fact, at UVM Extension, we instituted, like, if you purchase with your company credit card, you really needed to write next to each line, like, if it isn't obvious, what's the business purpose of this item? It's very important to have that because you're developing a trail of invoices and receipts. And in an audit, the auditor, what they do is they do a sampling procedure. It's a statistical procedure based on how many expenses you've had, individual expenses, and they do a sampling of your books. And they say, oh, we're going to choose this, this, and this. And they look, and if they don't see that it's documented, you know, in a paper or virtual format, if it's not documented properly, if it doesn't have a clear business purpose, they'll just start digging deeper. So that's what an audit does. So for nonprofit requirements, there, as Bobby, or maybe, yeah, I think it was Bobby, about there's IRS requirements. You want to meet the standards that you have to report to the IRS. But generally, I can say with confidence, commercial software, good bookkeeper are going to get you spot on in that. Would anybody like to add something about that? Give another few seconds to hear the chat. See the chat, rather. Okay. Okay, I just wanted, this is the last part. Got a chat here. Yes, a review might, and it depends on your, on the board, on the bylaws and stuff like that. So a review, yeah, sometimes organizations have informal audits required, which probably qualifies as a review. Internal audit. Thank you, Jim. So I wanted to talk a little bit about budget controls, just so that you had a glimpse into how cash is controlled and your responsibility for managing that. So control is just a way to monitor, to ensure that everything is above board. So just had to throw in a picture of Johnny Cash. See, I'm dating myself miserably here. Probably like, who is this? So cash can be obviously trouble too. And trouble is what we ran into. This is, I have a whole presentation on this, and it's one of those things that people are like, oh my God, or very interested in. So I was not I was not financial manager at this time, but a UVM extension employee had stolen $46,000, and it was a terrible tragedy because we weren't doing a good job in making sure that this employee was protected from even being able to do this. You know, it's one of those things, and it's like, this sounds so cliche, but it started as, I just need $200 for the hockey tournament. And, you know, for my kids, I need to get them there. I'll give it back. That's how it started, you know, in their mind. And it just got worse. And it's obviously it's their fault for doing something highly illegal, but also organizations have this very deep responsibility to not allow this to happen. And it's funny, in Vermont, you just read a lot of stories about this happening, and sometimes it's like amazing amounts. It's just like, how did they do that? I offered to the Vermont League of Cities and Towns this program, and I was going to call it "How to Steal Money from Your Town," but they didn't even smile. Okay, chat. Sins of omission. Yes. Other word. Yes. Right. Right. Yep. Good point. So we'll switch from here to go to budget control. So there's a bunch of different things that we do with money. And I've talked about authorizations. We'll get into a little more definition here, but these, oh, I said 7, there's 6 things here. And we'll go into it a little bit. Whoops, what's that? What? Hold it. Can't be the end of my slideshow. I'm sorry. Let me stop sharing for a second. I wonder if I brought up an old PowerPoint. If you have any questions, put them in the chat right now while I try to figure this out. This cannot happen. No, it still exists. What are we talking about? Looks like I've had some sort of technological error with PowerPoint. That never happens, right?
Never.
Never. Well, I know what I'll do. I'll switch to the PDF that I sent you, Sarah.
Okay.
Be creative about this. Thank you very much, everybody. Gonna open this up. This is not gonna work so well, but I'll try to make it work as best as I can. Okay, I'll share again. Okay, do people see a basic kind of screen on budget controls?
Yep.
I'm sorry this happened. My PowerPoint presentation shows the slides, but it can't get past a certain point. So it must have been corrupted somewhere between 216 and now. So going back to the types of controls, we talk about authorizations. And so that usually requires a preventative. It usually requires a management to formally approve a type of transaction. So I was talking about purchase orders and warrants as an authorization, or like just in your nonprofit, you can say, you can't spend more than $100 without talking to me, or you can't spend more than X amount of dollars without getting approval. So that's an authorization, very simple. And it can get very complicated. like I said, I've got to do purchase orders and warrants. I have to sign my name like 3 times to buy a ream of paper. Reconciliations, that is a detection. So that's at the end of the month, you're balancing your checkbook, right? You look at the bank statement and you say, hey, wait, that, you know, that, where did that fee come from? So that's detecting. You relating one data set to another to resolve discrepancies. So you've got invoices and forms in a file. You see what the bank statement says, that's a reconciliation. So that's one form of budget control. Now with this nifty PDF, I'm going to go this way. I hope you don't need Dramamine out there. Some others, segregation of duties. This is where we did a disaster, a disservice to that person in our extension office, is that in segregation of duties, you have different people doing different things. We had a one-person office where the employee had control over the registration, received the checks for registration, deposited the checks, reconciled the checks, did everything so that they were able to take a check or two and deposit it into their local bank because they knew people who didn't question third-party checks. So they were able to do this. So preventing that is you separate the responsibility. So in a cash management situation, for instance, at our library, we take cash for photocopies. There's just like no other way to do it. Sometimes it's a nickel, sometimes it's 20 bucks. And everything is recorded in a paper ledger. And then I go in quarterly, really I need to do it more often than quarterly, go in and I count all the money and I check it to how much they've collected. And but what this has done, and then I bring the cash over to the town and they deposit it. So what we've done is we've separated the responsibility. That is, the person collecting the money and writing the ledger isn't the same person who's, you know, taking the money at the end and giving it to somebody else. I mean, sure, there's places where you can still get into trouble here, but the more that you separate the responsibility, the better it is and the safer for everyone to make sure that a transaction is above board. Another really important thing, of course, is to you know, stamp that check as for deposit only. Physical safeguards are often used in UVM extension offices. We have a safe in every office, and sometimes it's kind of ridiculous, but it was part of what we had to do. And interesting story from Brattleboro, about 7 years ago, somebody broke into our Brattleboro office, which was over by the Joe Famolari property out there by the state park. I forget the name of it. But they broke into the office. They broke through the window. They broke to I don't know, and they got cut. They left blood at the safe. They jimmied the safe open, and the administrative assistant the following day said, "Yeah, there was a $15 check in there." So, and I think it was like 2 or 3 years ago, the Brattleboro police contacted the university and they said they have a DNA match, and the person paid it back. It was the cost of they paid back the cost of the safe. So anyway, that was a bizarre example, but prevention, locks, cameras, barriers. I mean, that's why you always lock, you know, you don't have petty cash just sitting in a shoebox. You have to lock things. And this is important for HR too, remember, you know, confidential stuff. So that's a physical safeguard. Records are very important, of course. Electronic evidence to support transactions, and information security systems using passwords, security access, that sort of stuff. Excuse me. Now I'm going to have to go to the next page down, or down further in the page. Here it is. Oh, I only have one more slide. That's my last slide. You can't have that yet. Just wanted to go over the learning objectives again. Oh, I didn't change this. This is operations, your organization. I'm sorry about that. Except for your librarians out there, then I do mean it. But appreciate how the strategic plan relates to your budget, how your mission and values relate to the budget. Hope you've understand a little bit more about what a budget is, and ability perhaps to, you know, when you hear accounts receivable, accounts payable, maybe even chart of accounts, some of the like income, profit and loss statement, some of those things. Be able to describe the budget cycle. That's very important to understand that the budget cycle, you don't want to start at the end of the fiscal year with relationship management. You want to do that all year round. You don't want to start constructing your budget 3 months before the budget is due. You want to start 6 months or 8 months before the budget is due. And then hopefully have a little bit more knowledge about managing the budget, and you know, being timely, getting reports that you can read. If you've got questions, you ask them. Expense to the correct expense code, expense line. And then understand a little bit more about financial controls. And the most important financial control, if you've got cash coming in, is really that segregation of duties, is that the person taking the money is different than the person depositing the money, who's different than the person who's reconciling those books. So we're ending with really pretty good timing here, 4:12, so we could take some questions that Bobby can answer. I mean, that I could try answering, if there are any. I really just thank you so much. I know that 2 hours of this is really, you know, challenging for any adult learning situation, and really appreciate your time today.
Thanks, Gary. If there are any questions, we could have you ask them out loud, if it's sort of a more of a conversational question. So if someone does have something specific they want to ask, kind of wave your hand and unmute yourself.
I will stop sharing.
Great. Jen, you unmuted yourself. Does that mean you want to speak?
I just want to say that for tomorrow, we'll have sort of presentations, but also some more question time. So if you're like me, you'll sort of, at some random point tonight, be like, oh. So, you know, jot it down or send us an email. You know, part of this, I don't know about most of you, but I sort of learned budgets on the job by people handing me things that they assumed I understood and me faking that I did. So, you know, over time, I've stumbled into a certain amount of knowledge, but, you know, to have that, just walking through of the like language, you know, really helpful to me. And we're just trying to kind of create a safe place to ask the dumb questions, sort of elevate all of our knowledge. And that's like the spirit of the whole program that Sarah runs, is just we're trying to kind of increase all of our capacity to do, you know, local, regional work, you know, in sort of community and economic development and projects. So, you know, that's, if you learned a little something, that's the whole point of this. So thank you for being here.
Bobby, do you want to say just a few sentences about what you'll be talking about tomorrow morning? You're muted still. The infamous Bobby.
Sorry, I had open door. People were walking in and out, so I was doing two things at once. I apologize. Sure, so I'm going to cover a lot. Probably you're going to hear again a lot of what Gary presented, but again, I think it's always good to hear things twice, and it does raise some opportunity for some additional questions, as Jennifer just pointed out. But I'm going to talk about budgets and different types of budgets. And that's going to include business, capital, program, and project. And I'll delve into why I'm separating out program and projects a little bit more tomorrow. It's really based on the makeup of this group and what you were all looking to accomplish from today's and tomorrow's presentations. And then I'm also going to provide some modeling for you. So you'll actually be able to see some of the way in which I budget, as well as some other resources for you to draw on as you're developing your own internal processes and procedures. So some of it's going to be hands-on, and I'll just walk you through sort of my thought process, and after 30 years of doing this, kind of my tips for what works best for me and hopefully would work for you as well.
Great. Do we have any questions for Gary? Gary, are you going to be able to join us tomorrow or no? I can't remember.
Yes, I'm going to definitely, yes, 98% there.
Great.
Yeah, I had something come up, but I'm absolutely going to try.
Awesome. Well, before we do sort of jump off, I did want to just highlight here what's happening tomorrow. So Bobby obviously talked about these things briefly, and then we will have a panel that Jen will be facilitating called Getting More Money. Thought that would be enticing enough. And so we have some people who are project related. So Jim, who's actually on this call right now, who's with Westminster Institute, and we'll also have Richard Wazansky, who is heavily involved in Broadbrook Community Center. And then we'll have some technical assistance experts. So the Vermont Community Foundation, Preservation Trust, Community Capital, and USDA. So just sort of thinking about, what are some things you might want to learn or ask. Those are the people that will be on this call tomorrow. So you should have the login if you're joining us tomorrow, and Eventbrite will send out another reminder tomorrow morning, which will have the login. So I think some of you, if not all of you, will be joining, and I think we'll see you tomorrow at 8:30. Everyone enjoy the sunshine.
Thank you, Sarah.
Thanks,
Jen.
everyone.
Thanks, everyone.
Thank you.